Most people assume the world's money is controlled by presidents, prime ministers, and elected officials. They imagine that national governments acting through ministries and treasuries shape the financial destiny of billions. But the deeper you look, the clearer a darker truth becomes. Real monetary power exists far beyond the reach of democracy. A hidden network of institutions, banks, families, and financial entities quietly directs the flow of global wealth. This is not the story taught in schools. It is not the version printed in textbooks or spoken about in political debates. This is the story of a financial architecture built behind closed doors by people the public never voted for and rarely even hears about. And once you understand this architecture, you'll see that money is not controlled by governments, but by an interconnected elite operating above them. Money itself is widely misunderstood. People imagine it as bills, coins, or digital numbers representing value. But in reality, money is a system of control, a structure of ledgers, credit, and trust, all maintained by institutions whose authority is accepted without question. These institutions define value, regulate debt, and shape every economic event on Earth. The journey begins with central banks. Every major country relies on a central bank to manage its currency, control interest rates, and regulate banking. These institutions appear governmental from the outside, but most are independent bodies, shielded from democratic accountability. Their decisions can move markets, crash economies, or ignite inflation, yet their leaders are unelected technocrats. The Federal Reserve is the most powerful of them all. Formed in 1913 after intense pressure from private banking interests, it exists as a hybrid entity, neither fully public nor fully private. Its founding involved several powerful banking families, including the Morgans and the Rockefellers, whose influence shaped the early American financial landscape. To this day, the Fed operates with unusual autonomy, insulated from political oversight. Most citizens believe the government prints money, but the truth is more unsettling. When commercial banks issue loans, they create new money with a few keystrokes, money that never existed before. This system, known as fractional reserve banking, means private banks generate the majority of global money supply. Central banks simply regulate the playground on which this creation happens. This alone reveals something profound. Elected governments do not create money. Private banks do under a framework managed by central banks that citizens never voted for. And this system ensures that debt, not productivity, becomes the engine of modern economies. But the real concentration of power does not end with national banking systems. Above central banks sits an institution rarely discussed in mainstream media, the Bank for International Settlements, or BIS. Located in Basel, Switzerland, it is often called the central bank of central banks. It coordinates global monetary policy from behind closed doors without democratic involvement. The BIS holds sweeping immunity. Its employees are protected from national laws. Its operations cannot be searched, and its documents remain sealed from government scrutiny. Finance ministers, central bank governors, and elite policymakers meet there regularly in complete secrecy. No press, no public, no oversight, yet decisions made inside these meetings shape global monetary policy. Many analysts describe the BIS as the highest monetary authority on Earth. It issues the standards that other central banks follow. It governs global banking regulations that determine how money flows across borders. And it answers to no electorate, no parliament, and no president. To understand how such institutions gained power, we must explore the origins of global banking. In the 19th century, influential families like the Rothschilds, the Morgans, the Warburgs, and the Rockefellers built powerful financial empires. They financed governments, shaped industrialization, and backed major wars. Their influence helped establish early central banking structures and international financial systems. Though these families no longer exert direct control, their legacy remains embedded in global finance. Their banking networks evolved into modern institutions that now wield unprecedented power. This continuity of influence is what gives the financial system its stability and its secrecy. The architecture they helped create still determines how wealth flows worldwide, yet even these institutions are only part of the story. Another layer of control exists in the dominance of the US dollar. After World War II, the Bretton Woods Agreement established the dollar as the world's reserve currency. Countries began holding dollars for trade, and global commodities, especially oil, were priced in dollars. This system, known as the petrodollar system, gave the United States unparalleled influence. Nations needed dollars to buy energy, banks needed dollars to settle transactions, and governments needed dollars to stabilize their currencies. The global economy became inseparable from American monetary policy. When the United States abandoned the gold standard in 1971, the dollar should have collapsed. But instead, its power grew stronger. Because oil-producing nations agreed to sell oil exclusively in dollars, demand remained high worldwide. This ensured that America could influence global finance simply by adjusting its own interest rates. The next layer is even more hidden. It is called the euro-dollar market, US dollars held in banks outside the United States. These dollars are unregulated by American law. They form a parallel financial universe where trillions of dollars move with no oversight from Congress or US regulators. This shadow system influences interest rates, liquidity, and global credit supply without democratic accountability. But the mechanisms of global control are not limited to currency networks. Another powerful tool is the SWIFT system. SWIFT is a global messaging network used by banks to authorize international transactions. Nearly all global trade relies on it. If a country is cut off from SWIFT, it becomes financially isolated overnight. SWIFT is not operated by governments. It is overseen by a council of private sector and central bank representatives, heavily influenced by Western institutions. When Iran was cut off from SWIFT, its economy collapsed. When Russia was partially removed, its financial system faced unprecedented disruption. This is raw monetary power, exercised without firing a shot. Above even SWIFT lies the International Monetary Fund and the World Bank. These organizations claim to help developing countries grow, but their loans often come with conditions that reshape national economies. Countries are pressured to privatize state assets, cut public spending, and open their markets to foreign investors. These conditions often benefit global corporations more than local populations. Many nations become trapped in cycles of debt. They borrow to survive economic crises, but the terms force austerity that stifles growth. This strengthens the grip of international lenders, and once trapped, nations lose the ability to direct their own economies without IMF approval. Private financial power is also far greater than most people realize. The world's three largest asset managers, BlackRock, Vanguard, and State Street, control tens of trillions of dollars. Their influence spans nearly every major corporation on Earth. They hold significant voting power in companies across technology, energy, pharmaceuticals, defense, and finance. When you examine the shareholder lists of global giants, you often see the same names. BlackRock appears everywhere, Vanguard appears everywhere, State Street appears everywhere. Together they act as silent stewards of corporate power, influencing managerial decisions across industries. BlackRock's influence extends further through its AI system, known as Aladdin. Aladdin analyzes global markets, risk exposures, and financial vulnerabilities across thousands of institutions. Many banks, insurers, and governments rely on Aladdin's recommendations to manage trillions of dollars. When Aladdin identifies a threat, global markets move accordingly. In effect, a single algorithm indirectly governs a significant portion of global finance. This means the world's money flows not only through central banks and asset managers, but also through software programmed behind closed doors. No voters approve these systems. No public oversight exists for their decisions. Another invisible pillar of global power is offshore finance. Trillions of dollars are stored in tax havens such as the Cayman Islands, Luxembourg, Switzerland, and Singapore. These jurisdictions allow corporations and wealthy individuals to hide assets, avoid taxes, and operate with complete secrecy. Governments know this but enforce little regulation because multinational corporations rely on these structures. These offshore systems form a parallel financial world. Money moves freely, identities remain hidden, and accountability disappears. Even governments store wealth offshore. The result is a financial shadow ecosystem controlled by banks, lawyers, and multinational firms that the public never sees. But perhaps the most revealing truth is this: money is controlled by those who control debt. Nations borrow from bond markets governed by private financial institutions. Corporations depend on capital from investment managers. Consumers live on credit issued by private banks. And governments constantly issue debt that investors can reward or punish based on political decisions. This creates a hierarchy where democratic institutions depend on financial elites. Countries with high debt cannot act freely. Governments fear market reactions. And every leader knows that stepping outside the boundaries set by financial power can trigger economic retaliation. This brings us to the final emerging layer of control: digital currencies. Central banks worldwide are preparing to launch central bank digital currencies, or CBDCs. These would allow governments and central banks to track every transaction. They could freeze accounts instantly, set spending limits, or restrict how money is used. CBDCs represent unprecedented potential control. Physical cash limits government oversight, but digital money ends financial privacy entirely. If implemented, CBDCs could give central authorities direct access to every citizen's finances. Combined with AI and financial surveillance, this could centralize monetary power further than any institution in history. So who actually controls the world's money? The answer is not a single group or a lone mastermind. It is a layered network of central banks, asset managers, financial institutions, international organizations, offshore centers, and elite families whose influence shape the system. Together they manage, regulate, and direct the global flow of wealth. Elected leaders operate within these boundaries. Their policies must satisfy markets. Their decisions must align with global financial stability. And their authority depends on institutions the public never chose. These structures control inflation, interest rates, and credit. They determine which countries thrive and which collapse. They influence wars, trade agreements, and political outcomes, and they do so quietly, consistently, and without direct public consent. This is the hidden architecture of global finance, a system built over centuries, refined through crises, and protected by opacity. A system where influence follows capital, not democracy, and where real power belongs to those who understand the mechanisms driving global wealth. In the end, money is controlled by those who shape the rules of money itself. Not governments, not politicians, but institutions, networks, and elites who operate far above the political world the public sees. And until people understand this, they will continue to believe the comforting illusion that their nations control their own financial destiny.